All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia. I'm the founder and CEO of Gar Capital. It is Friday, September 22nd, 2023. Wow, the month has really gone by quick. Already a Friday. Glad to be with you this morning and every morning, 9 a.m. Eastern Standard Time here on the YouTube channel. Plenty to go over. Yesterday was the first time, and I think it was 100 sessions or so that we actually had a decline in the S&P of over 1.5%. So we know that what happened with the Fed, we know the reaction. Couple of charts I'm watching today and I want to go over with you. Just a reminder, the recap of the week. Didn't have many trades this week, so it should be a quick one. So it'll be more of a preview into next week. We'll do some chart work together. We'll go over a couple things, economic data, such and such. So that video will be coming out tomorrow. That is not live. It is a recorded video. So if you don't want to miss it, make sure to hit that like button, make sure to hit the notifications button, subscribe to our channel so you don't miss anything. Good morning, everybody. Dow futures are up 37 points this morning. NASDAQ bouncing 0.62%. S&P 4387. That's up 0.34%. The Russell bouncing a bit, 1803 this morning. The VIX down 3.76%. The dollar up 0.13%. We also have Treasury yields to break that psychological barrier. Take TNX 4.5%. Pulled back a little bit. It is red. Crude oil continues to climb after pulling back slightly from the highs of around 92.43. We are now at 90.75, up 1.25. Gasoline futures up 0.75%, $2.63. 19.46 for gold futures, up 0.33%. That's with the dollar still being elevated. Possibility of dollar hitting resistance. That's something I want to talk about this morning. Silver futures up 1.13%. Copper up 0.65%. Again, interesting even with the dollar being up. Euro dollar, that's flat. 106.55, excuse me. 148.24 for the dollar yen. That's up 67 pips. The BOJ was overnight. No change in their ultra low rate policy. Even inflation is still high. BOJ, which is the Bank of Japan, has been talking about intervention at a key level right around, I believe, 147 was the number that they had in mind. We're beyond that. No news on little changes or any changes into their central bank bond buying policy. Again, they buy the actual treasury debt from the Bank of Japan. So, I mean, it's a whole deal. It's the quantitative easing of kind of like what we used to have back in 2009 after the great financial crisis. Japan does benefit from a weaker yen since they are an import economy. So they import as much as they can. They don't have a lot of things, but they export a ton of stuff too. So that's really their deal. They want their yen to be cheap, but not too cheap. It's always that balance. The 90s were called the lost decade. There was a time period that Japan was considered the largest economy, number 2 behind the United States. And as we know now, it's China. Some really great reading on the lost decade of the 1990s. If you're a macroeconomic head like I am, there's some really great material on there. It's called The Lost Decade, Japan the economic situation of the 90s. Pound dollar, 36 pips to the downside, 122.56. Bitcoin is flat. And Ethereum 1594 on the future side this morning. Good morning, everybody. All right, let's go ahead and take a look quickly at the dollar. So the dollar, I went ahead and talked about that yesterday in terms of resistance and what are we really looking for. So here we're at a point of what we call inflection, where kind of like that fork in the road. You either go left or you either go right. You don't know which way we're going to go, and we're right there. So couple of things working towards a possible breakout. We are not too overbought yet on the daily, 68. Overbought would be 70. And as we know with crude oil, it can be a lot higher. So you can be overbought or oversold higher than the RSI can hold, let's just say, our readings. I mean, at the peak of the dollar, which was around this time last year. Actually, this time last year to be exact. You were at an RSI reading of 78, and that was the peak, 114. We are now at a point where we're testing the March highs, and we broke on the S&P 500, the 100-day moving average that we haven't broken down since March. Another inflection point. As the dollar creeps higher, again, that hurts equities. Not one for one like we've talked about, but again, you can see that as kind of a leading indicator. Same thing with bond yields. So 105.87, that's your key inflection point. That breaks the March highs. That also breaks the 2022 June highs. So very clean resistance point there on the green line. The idea is that if you do break out of that, you're going to see weaker equities. You're going to see higher interest rates. So if that happens, we need to be ready for that. Then we're talking about 106 to around 108. And then things can start getting away from us. That might happen in the seasonally weak October. So let's let the dollar be our guide for the equity markets running in the future. Because we know as the dollar does get stronger, equities are going to be affected. Let's go and take a look at the S&P. Here's the bull case. Since let's just say, pretend for a second that dollar resistance rejects. Let's take a look at the S&P 500. This is the S&P 500 spot. Pretty clear levels of breakdown here on the daily. You're below the 100-day moving average. You're below the 20. We know that's downside. And you're below the 50. Really, you have the 200-day moving average there. That lines up with the February highs. Fair. But if we go ahead and draw a couple lines, trend lines, we had this on the S&P as well, but that broke. 4,300 is your new inflection point. Now, in terms of where we might open this morning, 43.87 ES, we may just open at 43.50, that's what it says here. Right, 20 points higher, maybe less. I would say that's probably going to open today, this morning, maybe 43.38. So 43.11, that lines up with the August highs. Right there, August 22 highs. So another inflection point. Does this hold? Does this trend line from October hold on the S&P? Do we get back above the 100-day and fill this gap? If we start breaking down below 4,300, guys, you really can't fight that tape at all. You have to stay short because there is no level of support if you break that until the 200. The problem that's going to happen, guys, is that you're just going to get this. If you start getting chop, that's going to hurt premiums. So your best bet here is probably futures, but again, you need to get below 4,300 S&P spot. That's 30 handles away, probably a little more this morning. And if you guys remember, technical patterns haven't been perfect. They have not. The setups have looked good at times, but the choppiness is kind of killing it. You could see this left shoulder, your head, and your left shoulder was forming. Take away this for a second. This is the right shoulder forming. We're coming down, right? But we bounced, we invalidated the neckline, got higher, even tested around the head area right there at that gap fill, 45.65, rejected, pulled back, bounced, and then here's your FOMC. Here's your Powell right here. Below the 100. You still have a gap to fill the upside, and you're still looking to test those August highs, August 22 highs. If you break below here, that's where you're looking at, 41.91. That's around, let's say 100 more points. We'll call that 1.5%, maybe 2%. Doesn't that line up with that seasonality in October that we talked about? Let me see if I can get that photo for you guys. The seasonality. Here we go. Again, we talked about this on yesterday's video. October, as we're getting into it, do we get that pop to fill that 4,400 gap? And we come back down. It looks like it's setting up for it. It does. It does look like it's setting up for that October swoon. But the problem is that now you're oversold. We haven't been this oversold since last year in September, which was, and again, we still had a little more downside. So maybe we start breaking things a little bit, and then we may get that relief bounce. We may get a relief bounce today, possibly. I don't know exactly on what news, but let's go and take a look at IWM. I filled those IWM puts. We are at 177.65. We're about 60 cents from where we were yesterday, close to the downside. I have the 176 puts for today. And the reason I bought those is that we have a gap to fill right here. The last time I bought IWM calls was a breakout. And then it was very much or so choppy. Just chop, chop, chop the whole way. And it was for the next week. And it was a grind for us to even get 10 to 20%. So I want to play the momentum here as we had accelerated down. Again, we haven't opened yet, but right there, 176.26. That's the target I'm looking for on IWM. Yes, we are oversold, testing oversold levels right around October, but you can see how that lines up with RSI. We still had that one leg down to 181.87. So I'm expecting at least this to wick somehow, and then we can always bounce here. But again, there is no support here. The real next support here is around 168.99. Guys, and look at this setup. Again, head and shoulders. The problem is that, do they chop you? That's really it. We know where we're going. It's just a matter of time, right? That same deal. Let's go and take a look at QQQ this morning. All right. I'm going to go to the daily here. So really, we tested levels that we haven't seen really since mid-August. Let's just say that, mid-August. That's the lowest that we've been in relatively the past couple of months. So not exactly, the world's ending either. You still have this right here, 350, 365, as a good level of support. We are below the 100 though. So we can get back down to here. We'll retest right around June 9th lows. But really since June 9th, when we had that breakout, it's just been really back and forth, chop. No real rhyme or reason, just a fat chop tape. You had a couple of times we had some levels that we broke out, we pulled back again, broke out. So tough sledding on Qs. I mean, you're not getting anything new. You're not really seeing any reason to buy tech stocks here or technology, period. Just for the fact that, again, rates are still attractive for cash. And you really need more news than just an AI headline in terms of an app. Microsoft, for example. Microsoft yesterday, here was the price action. Here's the AI news and then fades it. I mean, it's just one of those chop tape. And you really not much you can do other than just try to be as careful as you can. I was hoping for getting that IWM gap, maybe a gap down to the gap fill. We see that futures are open this morning, so far green. But lately, last couple of days, when we've had a green tape, we tend to sell off first thing. I remember that was on Tuesday, and that was on Wednesday. And then the opposite side, when we're red, like yesterday, it bid up in the morning, and then we faded. So again, very tough tape. Even Goldman Sachs had a note regarding the frustrating tape. I'm gonna go over all of this tomorrow on tomorrow's video. So that's where we are, guys. We just have to kind of wait and see. Didn't trade much this week, and a good reason why. It was a very ugly one. A couple of trades that I missed, Microsoft and Netflix puts. I missed those. But again, we'll be prepared. Just tough sledding out there. We just got to see, even with the S&P futures, we're back to, August 27 levels. We haven't broken yet on S&P. Could this be support, a relief bounce? Possibly. What I'm watching for is the dollar. If that dollar breaks 105.78 or 105.80, this can get away from us and start pulling back a little further. The VIX down 3.82. So interesting, starting to pull back slightly. Let's see how we open, and we'll go over it tomorrow together. Let's make it a great Friday. Have a great rest of your day, and I will see you guys on the Discord blog. Cheers all.